Guillaume, thanks very much for joining us. It'd be good just to get your sense on, I suppose, some of the key trends that you're seeing in the market, or kind of themes that you're particularly looking at.
So thank you, Richard, for having me, and hopefully we shared some insights together and with the industry players and MIPIM. I think the positive news is that everyone is obviously really keen on spending some money on value add and core plus and core. And from what we see and from the discussion we had with different key actors in the market, it seems that there's still a strong appetite wherever I would say you place yourself in the industry chain. So I would say this is one of the first news, and it's always good to hear this when you come back from vacation. But discussing with different people in the industry and that are really stuck in real estate, the only ingredient that was not, I would say, there at MIPIM was the end user, the tenant. And I would say this equation I was mentioning in the chain works as long as there's still someone at the end that is keeps on buying at a high price, and where I would say the value add can make his money, the core plus can make his money, and at the end of the day, also the long-term player, the core buyers can do their can get their long-term yields. So this works as long as we say other tenants wants to go further down the line to pay a high rent. And so far, we've seen some incredible deals going on, mostly in the CBD of top cities, London, Paris, and German cities. But I would say, if you look at the top deals that are being done here, maybe there's 5, 7, max 10 of them. So as far as I'm concerned, it's not a big trend. So I would say that, within the industry, everyone is kind of convinced that this trend will go, I would say, until the Fed and all the bank governance is still on QE and all this soft, I would say, allowance. But I would say if this stops, and obviously if the tenant says, we're not ready to do anything that you guys want in terms of rents or in terms of money capacity to have this war for talents. If the tenants are not capable to pay the rents that they're forecasting as of now to get a value add return, to get a core plus return, or to get any return we're looking at, it will be, I think, really hard for everyone to make the profit we're looking for. And it's not a desperate call, but obviously it's calling the real estate directors and the real estate people from the companies who are taking space in those cities. How ready you are to pay that rent, that high rent that you should need to get the talent you want, and are you ready to do anything to do that? Yes or no? If it's still a yes, hopefully the music can plays on, and the party will be going on for a long time. But if at some point for any reason monetary policy changing or any other exterior reasons, this music can stop really rapidly, and you can get stuck in some business plan where at the end you have like a high rent to match, and obviously a high yield to a low yield, I'm sorry, to match as well. And the high price you're going to pay now is not going to work in a 2, 3, 4, whatever your expectations are. So I think the key question here is, how far down the line the tenants are willing to go to pay the rents and to attract talents. Unfortunately, those people were not here and met them. I hope they're going to be, some of them are going to be at Expo or the next meetings we are, but those guys really hold the key to what we need to do to make our BP, I would say, still hold on.
Yeah, it's a really interesting discussion, I think, around how low pricing can, how low yields can go in that sense, and what that pricing means for the occupiers. Good to get your take on MIPIM, and look forward to Expo Real, where maybe there'll be some of those occupiers there and we can ask them that question, Guillaume. Thanks very much for joining us.
Thank you so much. Bye.